I want to get to PIMCO Chief Mohamed El-Erian. He's speaking with Tom Keene and Ken Prewitt right now about what's going on in Europe, but also about China. Let's head over to Bloomberg Radio.
Gold down 1380. We welcome Mohamed El-Erian again from Pacific Investment Management Company, and of course, all with Betty Lou Worldwide on Bloomberg Television. Professor El-Erian, Dr. El-Erian rather, Roy Smith, the professor at NYU, talks about Trichet bonds, a new Brady bond. Is that how we're going to get out of this mess in Europe?
Yeah, I mean, he's thinking of the parallel of Latin America in the 80s. So Latin America in the 80s, many countries, starting with Mexico, faced a debt overhang problem. It was clear that you couldn't have a haircut on the debt. You couldn't reduce the value of the debt upfront because the banks were too vulnerable. So you looked to buy some time by simply putting new debt on top of old debt. And 7 years later, you could finally restructure the debt. So I think that most people think Europe is pursuing that approach. There's two differences that have to be noted. First is that Latin America lost a whole decade of growth, and it's not clear that Europe is willing to give up on a whole decade of growth. Second, in the old days, you could bring 5 banks together in a room and tell them cooperate.
Yes.
Whereas today, you have millions of bondholders.
Heart of the matter, and it was out at AEA as well when I was in Denver, where are the European commercial banks? Don't they have to provide direction and leadership here by taking haircuts?
They do, but first they need to strengthen their capital. And that is what has been lagging. We have not seen the European banks do what the American counterparts have done, which is go out and preemptively raise capital.
Can they raise that capital and enjoy the dilution that comes with it? I mean, is there an appetite to do that?
That's what's an issue for them. But again, we are not in the world of first best, right? So every approach has a drawback, and the question is not whether there's a drawback. The question is on a net basis what makes sense, and they should be raising capital today.
We have a headline that just crossed the Bloomberg. Geithner has no doubt about Europe's ability to solve crisis.
I'm shocked.
How about El-Erian? Does he have any doubts?
El-Erian has doubts as to whether it's going to happen quickly enough in order to avoid further market disruptions. So over the long term, Europe is both able and willing. The question is, do you get the leadership up front for it to happen without collateral damage?
Could we pin you down a little bit on what constitutes quickly enough?
Quickly enough is before this thing spreads to Belgium and Spain. So what we've seen is this movie that first played out in Greece. Greece was the main actor. And then it played out in Ireland. Now it's playing out in Portugal, and it's exactly the same script. The markets get worried, spreads go to alarming levels. The Europeans say, well, we will provide additional support.
Let's review El-Erian 101 here.
That was Mohamed El-Erian speaking on Bloomberg Surveillance with my colleagues Ken Prewitt and Tom Keene.